To use your franking account, make sure you start with the correct balance. Noticing in this case I've put in a credit balance. I can manually add my transactions very easily, or I can cheat and I can bring in my transactions from the ATO integrated account and tax account. Just know what you're doing when you do this. So let's go to reports and we will import the integrated account. So that's the ATO integrated account, and reports and the income tax account have got a transaction in there, but I'll still import. This will be the tax account. So now you can see in both the case of the tax account and also in the case of the integrated account, I've got all of the transactions in here. Oh, let's put that as 2010 so you can see the whole lot. Okay, so I've got a lot of transactions in there, 7 pages. And then I can use my tools to help me select which of those transactions I want to introduce into my franking account. So I can then import from the validators, which are the 2 validators that I used over here, the income tax validator and the integrated account validator. So I'll import from the validators and I'll choose my range, date range. Now let's look in the integrated account first, and we will look for pay-as-you-go installments, and we'll put all of those in as payment of tax, now technically you should be using cash, the actual physical payment, as the credit rather than the installment. But you know, if the payment equals the installment, then this method will work. And now let's do the same with the import from the validators, and this will be the tax side now. And again, think about how you're going to do this, because let's search through there. Let's search for, well, in this case we probably better off just show everything and decide what we want to bring in. Now, as I said, technically you're supposed to use the cash side, but for this example I'm just using, so in this case this was probably, this was an assessment. When you see this on this side, this would be a tax return which has got, let's find a tax return where we know the transaction was payment received. Okay, tax return. So this one must have been a tax return which ended up getting paid, right? So I'm assuming this tax return was paid. And what I do here is we'll treat that as payment of tax as well, because we know that one was paid. And if you know there's a tax return which is refunded, like obviously this one got refunded, right? Then that would be a refund. But as I said, technically you're supposed to use the actual pay and refund. So did we get all of that? We certainly, tax return, oh yes, there we go. There's your payment, there's your refund. Of course your refund is a debit. Now let's pay a dividend on this. So share register, dividends, and we know there's plenty of franking credits. I'm going to remove those because they are from a previous demo, and then I'll just pay my dividend, and we'll use 30/06/2022, and we'll pay ordinary shares, and the dividend amount will be 20,000 for both members, fully franked. In fact, let's make that 50% franked so you can see what happens. select the members, you'll see the split, the franking credit, which is associated with the tax rate of the company, and then apply the dividend. Now, if we have a look in our franking account, we see the payment of the dividend and the associated franking credit impacting the franking account. So we end up with a final balance. But as I said, be careful, because technically you're probably supposed to use the actual cash. This is, I guess, a bit of a cheat method. You should probably only do it if you know for sure that your installments were paid around the same time and you're not breaching any franking account rules with respect to the franking account going into a debit position before you're paying your dividends.